Welcome back to the second session, lecture number 57, and we are going to discuss about, we were discussing about the global regulations, how it happens in UK, US. So we are talking about the UK case, and we were talking about some of the open banking systems. So first thing we saw was the interface, so which means that I wanted to also touch upon what is API that we are discussing. So some of you may be wondering, so application programming interfaces, what it says about. So it has the certain set of rules for software systems to communicate and exchange data securely. So APIs are meant for that. What is the intuition behind? Intuition behind is that it can provide the facilitation of data transfer based on request and the response both. And how it works, so banks will have so API will be in between, so bank will be sharing data with API and API will be sharing data to Fintech about the customer service. So this is how it works. So for example, you can think about UPI in India. Application programming interfaces help a lot, and application programming interfaces are also linked for the loan apps and transaction data, account aggregate data sharing. So all these examples are linked. What is the most important part? There is entity to provide. For example, in case of UK, we saw that TrueLayer is providing the API, right? And then here we have the Plaid and Starlink bank kind of setup. In the same way, we are having the application programming interfaces with the, so first thing is that it provides the secure data transfer authentication, standardized that there is an entity which is segregating the data into particular format, so that for data analysis it becomes easier. And there has been, and there is a real-time data flow. So any day, any time you want, this particular data is available for you to check. For example, if I am applying for credit card with Paytm, or suppose if I want to utilize certain services of the Paytm, then and my account with SBI, then Paytm can access my details through API, and bank has already given the data to API entity. API entity will transfer the data to Paytm, and Paytm will see my credit score and all other the credit worthiness, and then they will facilitate the services based on that. So what is the gist? Gist is that a low integration cost, and it promote the competition as well as innovation. So this is how it is linked with. So UPI, if you think about UPI on API, so here we have the Google Pay, Phone Pay, you can say Stripe, PayPal that we have for global. In lending, you can think about APIs faced the GST income transaction, instant credit scoring. They can also have this access to CIBIL score, and they can also, based on your previous KYC data, they can calculate probability default based on using some regression approach, and they can have their in-house analytics team doing all this work. So it also opens the job market for all this data related work, data analytics related work at the bank level. So TrueLayer, here we have the Plaid, which is related with account aggregators in India. Banking as a service, the SaaS that we see, it is also linked with the Razorpay and Solaris are two important. So this digital infrastructure, basically it has given whole lot of opportunity to exploit the digital footprint and help in facilitating the instant banking and financial transactions. So these are the some of the important thoughts that I thought I should be discussing. Let's have the example on the open banking. Suppose how open banking helps enable the cash flow based lending using real time data. Suppose loan portfolio is 1000 crore. Based on the KYC data, you calculated the probability of default of 6%. With open banking data, probability default is just 4%, and loss given default is suppose 50%. Your expected loss is going to be around the deduction that you are going to, it is just going to be 10 crore, which means that you can easily avoid the agency cost, which is the adverse selection kind of scenario. So agency cost you can easily avoid, and you are more accurate in the prediction of the data. You are also having the opportunity that you can expand your services and serve those similar consumers who are having the similar income sources, and if you have already good track record of serving them based on their digital footprint, so even you have a new customer coming, so you can rely on them and you can expand your services. So basically open data helps in efficiency, competition, and also in a big way the inclusion, and this inclusion can be linked with what we call it as the financial inclusion. Right, so this is what we get. Now let's get into the US system. So in UK system we know that how they have gone for the sandboxes and open banking, and through APIs they are providing the real time data, and with that data they are putting a check on whole lot of credit related market issues, and they are able to provide the efficient services. In US the culture is different. So in US the regulatory system is more fragmented and having the multi-agency approach. For example, for Consumer Financial Protection Bureau, they have to go for consumer protection, lending practices and disclosures. So startup has to apply for clearance with CAPV. Then Office of Comptroller of the Currency, so OCC is one area that they touch upon. So there they will be talking about the supervision of the national banks, fintech bank partnerships if they are having fintech startups and incumbents, so that is also one challenge. Then if they are providing the trading services also, then Security and Exchange Commission comes in, which talks about the investment platform. So basically you can think about these fragmented agencies. So in India also we are having the fragmented agency. For example, if you want to apply for banking, you will go to RBI. If you want to apply for pension, you will go to PFRDA. If you want to apply for license for selling insurance services, you will have to go to IRDA, right? And if you want to go for insurance of life based product, then you will have to go to LIC. So in India also it is much more fragmented. In case of you, and if you want to go for the stock market trading, for example, you want to facilitate, so you have Grow app, Upstock, all these apps that we have, Zerodha, all these apps that here we have, they seek licenses through the SEBI, and SEBI will be playing. So in case of US it is SEC, in case of India it is SEBI, right? So this is what we get. OCC could be the one of the subsidiaries of the Fed, but Fed comes separately here. So one is the Federal Deposit Insurance Corporation. In case we discuss in India, right, that up to 5 lakh rupees when we are discussing the bank run, the diamond and the big model. In bank run case, when how to avoid the bank run, so you have to provide the deposit insurance. So in India it is 5 lakh rupees, right? So if you want to provide the banking services, then you will have to seek also approval from FDIC, and FDIC will be giving you the license that yes you can operate, but in case of bank run case you will have to provide insurance. So you will have to commit to this organization, and if they have already national labor rules, then you will have to align your policy with that. So as a young startup, you may not want to get into all the dirty waters, then it becomes a challenge. Fed Reserve, payment oversight, systemic risk, monetary policy, all macro angles. So there is no single unified fintech regulator. In case of UK it was FCA. Then here we have the activity based regulation. So here lending, payment, securities. State level licensing, so a lot of states are providing separate license. So entities have to seek separate license from the licensing agencies. A high compliance and legal structuring cost, so this also deals with. Encourages bank fintech partnerships, so this is also one region. Then here we have the regulatory fragmentation, which also help in getting the innovations, and it also basically overall what it comes like. The system characteristics of the US looks like that it is not that much favorable for the fintech startup to operate so easily as they find in case of UK. And if you are related to only one product, for example, you want to facilitate the stock trading, then you can seek the license from SEC. Still, if you want to operate in 4 to 5 states, you will have to apply for licenses in those states, and then you will be allowing to do it. So this is where it is very, very important. So in case of US, they go for, like for example, in this case they focus on the CHIME, so neobank partner with FDIC. Sophie is one startup that they have with fintech, and then you have Lending Club, Stripe. All these are the examples of the US based. Let's talk about the India's fintech model as a summary, because we have covered almost all the things in last 2 sessions. So let's give a quick recap to what we are trying to discuss. So one is the India's fintech model is built on the digital public infrastructure, so DPIs, right? So that we have mentioned already, and it offers the low cost data transfer, and it also helps them cutting down huge amount of cost that we have. For example, if you are going for manual KYC at a bank, then you will have to put a personnel, and if the cost of per KYC coming out to 120 rupees, with eKYC with digital footprint you can easily minimize the cost. Second is about the payments. So if you are having the payment system, then it also helps a lot in building up. So this is also important. Then here we have the what is the mechanism. So mechanism is that DPIs help in getting the low cost data transfer, fast onboarding because they are providing the eKYC, and scalable innovations, which for example you can think about the account aggregators, right? So this is what. So account opening, earlier it used to take days with manual banking. With fintech, so it can happen in a minutes. In UPI digital transaction, we are saying that if you are going for manual settlement, it has the real-time settlement as well as we are having the near zero cost. So which means that we are going to promote the private innovation with public infrastructure, and this scaling up is a characteristic that everyone appreciates. Then here we have the ecosystem that we discussed. So in case of banks and NBFC, then here you have the balance sheet. The fintech are also into the tech, the UX, and some kind of data analytics. RBI is already getting into the sandbox and RBIH. So this is what. So if the cost of loan is this, you will save around 3.5 crore because of this, the loaning that you get, and it provides the services at very minimal cost, and this is where it is important. Interoperability is one dimension that we touch upon. So here it is UPI account aggregators are having. Low transaction cost is one area that we touch upon, and overall that we have this we call it as Jandhan Aadhaar kind of mechanism. So Jam Trinity is one dimension that we often look at. So overall it is having the DPI, digital infrastructure that here we have, right? Digital public infrastructure, plus here we have the regulations plus private information. So it is also helping in a big way to deal with it. So overall what comes out with UK, US and India, that similar to what we have with the UK, we are coming up, but we still have the fragmented regulatory bodies in India. At a state level it is not an issue because it is mostly at the regulatory body level. So it is not that in like US you have to apply to states for operation. It is applicable to everywhere. So once the RBI approves, it means that it is applicable to all the states, and all the states will have to apply those kind of payment services or fintech services. Another important dimension that is coming up is the fintech bridges. Fintech bridges, which means that it is a formal cooperation arrangement between regulators in different countries to support cross-border fintech scaling, which means that if the startup in India wants to operate in UK, and if they already have the fintech bridges, then it will be easier for Indian startup to operate in UK, and similarly for the UK startup to operate in India. So this is also one good thing which I find, and I thought it is worth mentioning here. So it ensures the entry of fintech firms into foreign markets, provide regulatory guidance and clarity, and it also helps in building up information. So here we have the, for example, they can form a joint working groups, regulatory coordination, or a committee can look into these things, referral system for fintech. If the fintech is already doing good in some country and without any reputational loss, then those fintechs can be referred, and a committee can look into the expansion of that into India and allowing that operate in India with certain due diligence or safeguards. So this is alignment of sandbox and licensing purposes, right? Which means that if you already sandbox the particular innovation with certain safeguards, and the foreign fintech is not very much comfortable with those safeguards, then some harmonized safeguards rule can be designed and can be outlined so that mechanism can be promoted. So cross-border innovation, here we have a need for regulatory coordination. So this is what it helps. Why fintech bridges matter? Because this leads to overall mutual expansion of a particular industry. So this is where it is very important. Lower entry barriers. So for example, if the startup is coming raw to any country, then the country may be very hawkish on that kind of entrance, and it may create a trouble. Second thing is the scalable fintech products, where scalability matters, and this is what, and also about the global competition and innovation. So UK has that advantage, and London is considered as the global fintech hub, financial hub. So it is because of the regulatory sandbox innovation. So overall, the credibility of the London is very high, and most of the fintech bridges help in getting higher credibility through this, the revenue minus cost minus compliance uncertainty, right? So this we can minimize. So it will be just revenue minus cost. So suppose revenue is 150, cost that you are incurring is 120, and then again you are having 80 rupees coming off this. If you can minimize this to 0, then 30 will be the profit of this particular firm, otherwise it will be loss. So fintech bridges, finally what it helps in that it reduces the uncertainty, and this turns into profitability and further investment. So this is how we try and define in this particular segment, right? So this is what we find. In case of, I searched on internet and I found this particular example, and I thought it will be worth discussing here. So UK FCA has fintech bridge agreements with countries such as Singapore, Australia, I am very much sure, and India too. Right, so UK based payment fintech wants to enter Singapore. At India, we have still because India and UK are going for free trade agreement, so it is also part of that, but it is yet to be finalized in a broader way. Singapore, Australia, and India. So UK based payments fintech wants to enter Singapore. Without a bridge, it will have the separate licensing fee, rules will be different, and it may be also for certain market characteristics. Like for example, if domestic firms are not interested in allowing the entrance of a particular foreign firm, fintech firm, then they may request the regulator to delay the loan approval time, and this is very important. So what fintech bridge helps, it goes for regulatory compliance, regulatory guidance, referrals it will have, faster approval and sandbox access. So that's what it plays important role. The examples are like, for example, approval time reduces from 12 months to 6 months. Monthly revenue potential, for example, if it is 5 crore, then it is going to be 30 crore, which means that basically it is talking about regulatory coordination and faster scaling and higher global integration. So I hope this example. So basically the fintech bridge is an arrangement for speedy approval, and so you can say ease of doing business. So it is part of ease of doing business. You might have come across this when we often discuss this in the newspaper, and we find a lot of opinions on India's ease of business. So in fintech ease of business, the fintech bridge becomes a important dimension to look at. If you look at the fintech regulation, so what comes out that the conduct becomes, there are risk, rules, tools, infrastructure, and comparisons that we have done so far. So in risk we cover the conduct, operational, cyber, and integrity, stability. Rules we have the digital lending norms, accountability, disclosures. In tools we have the sandboxes, and then here we have the innovation hubs, RegTech and all, right. So this is what here we have, and rest of the things we discussed. So which means that for fintech success, you have to go by technology, trust, and regulatory discipline. So overall, this is what it implies. Now we are going to discuss about the emerging issues in the fintech, because a lot of you may be interested in doing some assignments or maybe taking up as one of your areas of interest. So I thought that we should discuss some areas, at least shed light on some areas, so that you can take up those as one of the areas to look at. So in emerging issue, one is the scale of the fintech ecosystem. So fintech has moved from the niche innovation to a large ecosystem with a strong network, data, and regulatory implications. So this is what here we have. And in case of landscape, so it is so India has emerged as one of the world's we know that it is one of the important ecosystems in the world. There are areas where we find that the fintechs are operating. One is called payment, another is lending, then insurtech, which means that the tech application with the insurance product, wealth tech with the wealth management, RegTech, we know the firm level. Then infrastructure layers are also being done. So which means that in wealth tech, especially the robo advisory and other areas are playing important role. So chatbot kind of system that each trading agency is now. So how has been the application of digital infrastructure with the analysis of large volume of stock recommendations, buy sell strategies, how are we able to recommend a stock for profit purposes. So certain AI based applications are well encouraged. So if you are interested, you can look from the text data perspective and analyze that from the payment side, that what has been the progress of a particular the payment infrastructure, and if you get these confidential data, then you can analyze and find out what kind of expansion we are seeing with it. In RegTech especially, since it is at a firm level, it becomes important to analyze. So you can also, if you can get the KYC data, so you can also analyze that how firms are helping, how technology is helping the firms for certain regulatory disclosures, aligning with the audit trail, and also the automated the compliance norms. So this is where, so growth is increasingly shaped by scale, compliance and monetization. So this is what here we get into. And another important thing is that as it becomes importantly larger, you can think about the sustainability, the market power that we discussed already, those indicators which we were linked with, like for example Panjara rose, then we also considered the certain indices like Harfandal index, and then here we had the monopoly market power. So all those indicators you can calculate and see with the data available. I will be discussing data also in a few moments. Another is the scale. Scale is that we are seeing a large interest in the fintech ecosystem, and in India it is somewhat subdued with regard to the performance, because we find that a lot of time the fintech expansion has not been that great, and it is becoming overly I would say in terms of the startups. So we see that more than 10,000 startups are operational in India. In case of a global fintech investment, we saw that it has reached $116 billion, and the deal has been more than 4,700, and we are also seeing that in India there has been around 120 deals. So if you want to see the expansion of fintech startups and how it is helping, so we did a study that how fintech ecosystem expanding in India across states, and we found that the Mumbai metropolitan region, Bangalore, Gurgaon, so for example NCR we call it, so there we find that the majority, and Pune also came out as in one of the important destinations. Otherwise we find that rest of the places are just evolving, but for fintech these regional entities and regional cities were playing an important role and became hub. So you can think about what are the governing factors explaining the fintech funding. For example, there is something called signaling theory. Signaling theory is that whether the promoter or the startup founders are having degrees from IIT IIMs, like for example if they graduated from IIT IIM, so credibility becomes very much important, and then it also reduces a lot of asymmetry with regard to adverse selection and later the moral hazard, because there will be trust and there will be build up of lot of innovation based thinking. So we found that there has been there has been positive impact of premium institutions degrees on the fintech funding seeking, but on gender side they are not doing well in India. They need to promote the fintech startups at the firm level. So overall what it comes like scale advantages and all those things play important. So you can think in that direction, that how it helps. I also thought about, since we are dealing with the startups, then what is the meaning of a startup, because some of you may ask that. So it is all about setting up of a young firm to develop a scalable and innovative business model. So if you are opening some kind of grocery store, so it will not be called a startup until unless you bring some innovation or unique delivery system or unique product procurement system, so that somewhere you are adding value to the existing system. So this is what innovative business models under conditions of uncertainty. So what are these? So it is first the innovation driven. Second is high growth potential that we see. So a lot of time when we discuss startups, so they don't they forget to mention this part, that it has to be business innovation model, otherwise it will not be called a startup, it will be called simple business, right. So this is what is the difference. So innovation driven, high growth potential, that here we have. Then here we have scalable model, and third thing is that it is uncertainty. In funding stages, because a lot of you doing may be doing for the first time, and some of you may be aware, but the first funding stage that here we have. So here we get through two institutions play important role. One is the incubator, another is the accelerator. So accelerator like existing firm mentoring a lot of young firms, incubator like incubating an idea. So normally incubators are at institutions level, education institutions have the incubators and they mentor the incubating idea and they provide support in the beginning. So this is what the seed, seed grant comes in. So it will be at the ideation state and you can develop a prototype. So mostly it will be like out of pocket. So founders are paying through out of pocket or through some angel investors. So this is what we get. So prototype and ideation comes in mind. Then it moves to the next level. So once we have prototype ready, then we move to the product market fit. So then you can go and compete and you can give presentation to different potential investors. Now you have the prototype ready, so it will be easier to convince, and then the Series A funding start. So for example, they will be exploring the market and how your product is suited for the market. So there will be alignment and realignment happening. So this is where we get in. Series B funding, you want to scale up. So now you have understood the market and your potential for your product. So now you want to scale up. So this goes to the Series B funding, where they will be providing supplementary money, but it is mainly meant for expansion. For example, if you think about Lenskart, so Lenskart, it was a startup. So in the beginning they had the seed and Series A, and now you can find that the Lenskart is spreading its wing across geographies. So this is what the scaling operation comes in. Series C plus is also linked with B with expansion and dominance. So here the presence will be felt, and they will be also spending a lot of money on marketing and other part just to make sure that they remain. The exit is that if the startup is being sold to new existing entity, then it will be called as the success, because whatever the cost that you have incurred, suppose reaching till expansion and dominance, you spend around 200 crore, but you are able to sell your startup in 1000 crore to existing firms. So 800 crore of your profit. So you can pay back with some returns to the investors and you are still profitable. So this is what is called acquisition. IPOs like you don't need now, you have enough market confidence, high credibility, and now you want to list on the exchange for the public opening, and once you go for initial public offering, it means that you are successful. So IPOs are IPO announcement by a startup. It is a sign of success, but at the same time the startups have to be valued. So loss making startups, if they are listing, so it means that they have to be examined in a very thorough way, that whether they have the potential to expand the market or they will be killed by competitors. So IPO stage is considered a success, or acquisition is considered a success. If the startup doesn't reach to this stage, then it goes to the death valley. So it means that a startup failed. So this is what. So which means the risk is lower, scale up is higher, and then it also leads to the funding. So if you are interested, we worked on this particular idea and we have still some ongoing work. So you can refer to my web page, you will find some papers on fintech. So with this, I am stopping it here. We will continue this in the next session and we will try to touch upon. So, so I hope you have enjoyed the discussions, and this would be the last on the fintech segment, and we will be trying to touch upon further issues. So with this, I am stopping it here. Thank you so much.